Well, thank you, Madam Chair. First of all, I want to really thank you for the incredible, fierce advocacy that you've had in this regard and the way you've used the subcommittee. And I'm pleased to be allowed to join as a member of the full committee you today. And of course, it seems to me that the best way to protect student loan borrowers is to forgive student loan debt. And I'm pleased to be working with the chairlady, Senator Schumer, and others to achieve that. But I'd like to focus on the impact of FIA, upcoming student loan service transfer, will have, in my view, an already beleaguered program. The Public Service Loan Forgiveness Program, I think, is going to be further beset by this transfer. So, Attorney General James, can you tell me any lessons that you learned from previous federal loan transfers?
Well, thank you, Senator, for that question. The last federal loan portfolio, the transfer provided valuable lessons that all of us should learn from. In 2013, the federal loan servicer known as ACS, now known as Conduit, lost its contract to service federal direct loans and transferred millions of loans to other servicers. And when ACS transferred its portfolio, many of the now servicers found that their records were missing and that ACS borrowers, their records reflected servicing errors. And as a result, some ACS borrowers, they lost credit for qualifying for the Public Service Loan Forgiveness Program. They lost actual paperwork and documents with respect to their payments. And such losses will unfairly delay their ability to obtain forgiveness and increases the cost of their loans. And there is a risk that similar programs could arise from FIA's transfer of loans to other servicers. And it's important to note that not only FIA is transferring their loans, but there's other servicers that are considering servicing their loans to other services as the federal government reviews contracts. And to ensure that such problems do not happen in the upcoming transfer, the Department of Education, together with state and federal partners and my colleagues all across this nation, state attorney generals, we must ensure that FIA and other servicers, that they provide all the necessary and accurate and up-to-date records relating to the loans, that they ensure that new servicers audit and actively monitor accounts for any errors that might occur during or prior to transfer, that they have adequate staff to meet the demands of all borrowers, and that they ensure borrowers are not penalized for prior service errors or errors arising from the transfer. And last but not least, that the burden is not put on borrowers, but that the burden is placed on servicers. The department should apply a rebuttable presumption that payments made during the period of missing records are qualifying for the Public Service Loan Forgiveness Program. That is so absolutely critically important. You know, as was mentioned before, Senator Warren, Chair Warren, in the previous hearing indicated how the student loan program and the amount of debt really just exasperates the racial wealth gap in our nation. And it's important that individuals understand that this wealth gap, unfortunately, is having a disproportionate impact on borrowers of color and low-income borrowers all across this nation. It's a system that has already been indicated by the chair and others, a system that is broken, that needs to be fixed as soon as possible.
Well, thank you. That was a very full answer. It took most of my time. Do you have may I have another minute or two? Oh, okay.
Take as long as you need
here. That spoke to many of the questions I had, so you gave me a very comprehensive answer, Madam Attorney General. So basically, ACS not only managed millions of borrowers' federal loans, but they executed the transfer poorly, and those transferred loans were riddled with missing or inaccurate information. And is it true that you found that ACS deceived borrowers concerning the availability of their PSLF opportunities?
Yeah, we're in the, again, in the practice of looking at all of these loans, and our allegations include but are not limited to the fact that they engaged in deceptive business practices, Senator.
And is it true that that mismanagement that you uncovered from ACS blocked consumers from obtaining the forgiveness that they qualified for under the PSLF program?
Not only blocked them, but delayed their payments and delayed their ability to pay off these loans, and to not only pay off the loans, but also to get a loan forgiveness under the PSLF program.
So I'd like to ask both you and Ms. Yu, so if that's the experience that we have here, don't we agree that there needs to be extensive supervision, both by the Department of Education and the CFPB, to ensure there's not a repeat of the errors that hurt student borrowers?
Absolutely.
I would agree, along with attorney generals all across this nation. There needs to be a collaboration with all of the various agencies, as well as the attorney generals.
Now, finally, today, 3.3 million private student loan borrowers owe an estimated $80 billion in loans that reference LIBOR. As the lenders transition away from LIBOR, I'm concerned about the lack of protections for borrowers in private student loan contracts. Ms. Yu, as lenders transition away from LIBOR, can private lenders choose a replacement reference rate that is higher, thereby potentially increasing the borrower's interest rate?
Yes, they can.
And how can Congress and regulators ensure that lenders choose a replacement reference rate that is fairest to the borrowers? For example, should the CFPB release guidance to private lenders as they transition away from LIBOR to ensure that borrowers aren't stuck permanently paying higher interest rates?
Yes, the CFPB must quickly complete its rulemaking related to LIBOR and encourage companies to adopt the SOFR, which is the recommended rate by the Alternative Reference Rate Committee.
Yeah, Madam Chair, this is an area where you could have a dramatic increase in debt as a result of the transfer away from LIBOR. And I have a real concern with the fact that, and this is the very last point I'll make, Ms. Yu, your research found that millions of borrowers who have been in income-driven repayment programs for more than 20 years, of that, only 32 borrowers have had their loans canceled through income-driven repayment. Is that right?
That's absolutely right.
And according to the CFPB, more than 90% of African Americans and 72% of Latino students take out loans to attend college in comparison to 66% of white students. Additionally, minority borrowers are defaulting on their loans at disproportionately high rates. What's the impact of IDR problems on borrowers of color who disproportionately rely on student loans?
Absolutely. The impact is that borrowers of color are paying more on their loans for longer, and this is robbing families and their communities of the wealth that they need to rebuild, to frankly, bridge the racial wealth gap.
Well, more for longer is not a phrase I like, Madam Chair, and less for less time would be a lot better. So thank you to all of our witnesses for your insights.
And thank you, Senator Menendez. Appreciate your partnership in this. We'll keep working on it. So.